Hey everyone, Intel and AMD both recently reported quarterly earnings results, and given they're both participating in this rising artificial intelligence industry, I thought it'd be a really good time to compare these two and answer which one I think is the better AI stock to buy today. So I'll look at these two on revenue, profit, cash flow, their balance sheet, their valuation, and what Wall Street thinks their earnings will be over the next 5 years, and then come to a conclusion on which one I think is the better one to buy today. So let's take a look starting with revenue.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, I have history here going back 10 years on revenue growth for AMD and Intel. And given this metric, Intel is right about where it was 10 years ago. 55 billion in revenue in the most recent trailing 12-month period. That's about where it was 10 years ago. Of course, this is because it experienced a big decrease in revenue in recent years, given the big slowdown in personal computer sales following the surge in the pandemic. AMD also is experiencing a decline given that they also operate in the computer industry, the personal computer industry, with their own CPUs. They're also experiencing a bit of a slowdown. Their business is mixed right now. They have one part of the business that's serving the artificial intelligence market. That part of the business is thriving. And then they have another part of the business that's serving the CPU and the gaming market. And that part of the business is declining. So they're in a mixed position here in terms of revenue growth. But both Intel and AMD will benefit in the rebound in the personal computing industry that's coming this year. It's already started. It's likely going to pick up momentum later this year and then really pick up steam in 2025 and 2026 as the replacement cycle takes hold and these personal computers get embedded with greater artificial intelligence technology. Now, looking at their profit margins for the last decade, Intel has had the advantage for the better part of the last decade, but AMD was making great progress. In fact, towards the end of 2022, the company had almost reached Intel in terms of operating profit margin, you'll notice here, but before they both kind of experienced a collapse following that big change in consumer spending patterns. Remember, it was like a sudden economic reopening that quickly shifted consumer spending away from goods and towards services like travel and concerts and theme parks. And that was bad news for Intel and AMD both. Now, looking forward, the analysts on Wall Street that are following AMD stock, they think the company's going to deliver earnings per share growth of 22.8% for the next 5 years. Now, that's expected to be a big slowdown from the 54% earnings per share growth it delivered in the previous 5 years. I think the analysts on Wall Street are underestimating AMD's growth prospects over the next 5 years, given its latest generation GPU for artificial intelligence, the MI300X, is already off to an incredible start. AMD has said it's the best product launch in its history. And I think that product is going to grow to gain market share because the industry wants to diversify away from NVIDIA. NVIDIA, best in class, but has too much market share for the comforts of some of these larger corporations that are reliant on NVIDIA. They'd like to diversify away, and AMD is going to be best positioned to capitalize on that diversification. Now, just as I think analysts on Wall Street are too pessimistic on AMD's earnings per share forecast, I think they're too optimistic on Intel. Mostly, I think they're thinking Intel's going to bounce back strongly given their negative earnings per share in recent quarters, and their investments in the foundry business is going to end roughly next year. They said the bulk of their spending will have peaked next year, and so they think the rebound following those investments will drive higher earnings per share. They think Intel will grow earnings per share by 36.8% over the next 5 years. but I'm a bit skeptical on that. I think it's going to grow, but not at that rate. The past 5 years, Intel's earnings per share has decreased by 33% per year over 5 years. So that's why I'm less confident in Intel's ability to grow its earnings per share compared to AMD's ability to grow its earnings per share for the next 5 years. So looking at cash flow from operations, Intel again has the advantage over AMD, but AMD has been moving higher over the years, whereas Intel has been moving lower over the years. 21.78% versus 7.46%, the final numbers. But I wouldn't be surprised if 5 years from now, AMD has closed this gap with Intel. Now, I also wanted to look at their balance sheets, and the way I look at a balance sheet briefly is looking at the cash and short-term investments and comparing it with its long-term debt. Now, there is more analysis involved, but just to summarize it and make it as simple as possible, I narrow it down to these critical metrics on the balance sheet. And in this regard, Intel is more levered with $52 billion in debt compared to $21 billion in cash and short-term investments. The company has borrowed heavily to invest in this expansion in the foundry business, adding capacity, increasing manufacturing, and that will likely pay off over the next several years as demand for semiconductors is absolutely soaring. But nevertheless, it has invested billions of dollars and it borrowed in order to make those investments. AMD, meanwhile, has $6 billion in cash and $2.4 billion in long-term debt. What this means is it can pay off all of its long-term debt and still have more than $3.5 billion in cash. Its balance sheet is in a much better position. And typically when your balance sheet is in a better position, you're able to grow much better because you can capitalize on opportunities much better and you're not constrained with capital. If you see an opportunity, you can go ahead and capitalize. Whereas Intel is getting stretched in terms of the balance sheet, right? 52 billion versus 21 billion, still okay, but the company's delivered negative earnings in recent quarters, negative cash flow in recent quarters, investing billions in the manufacturing expansion. Investors might get hesitant with giving Intel more rope in this expansion plan. Now, the good news for Intel is it's benefiting from billions of dollars of government incentives, billions in dollars in grants, and billions of dollars in loans. That's making this an opportune time to expand its manufacturing facilities. Now, finally, I wanted to compare these two on valuation. Intel is trading at a forward price to earnings of 16, while AMD is trading at a forward price to earnings of 21. Now, given their prospects over the next several years and the balance sheet position, and given AMD's more primed to benefit from the rising effectiveness of artificial intelligence and the competitive diversification going on among corporations trying to diversify away from NVIDIA's GPUs, even though NVIDIA's GPUs are by far the best, corporations want to diversify away from having such a large exposure to that. So given those prospects, I feel AMD deserves this premium valuation. And if I had to pick between these two, I would pick AMD as the better stock to buy today. Even though I have both of these stocks rated as a buy, I also think Intel is a buy. But if I had to pick between the two, I think AMD is a better investment today. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.